Welcome to the Daily Business and Finance Show. COVID and flu shot combination linked to stroke risk in older adults. Altria narrows earnings outlook after Q3 miss. BP invests $100 million in Tesla chargers for U.S. expansion. Amazon surpasses expectations with strong sales despite AWS concerns. Enphase Energy stock plunges after revenue miss and weak Q4 guidance. Nasdaq enters correction territory as tech earnings appear uncertain. Intel's PC rebound leads to blowout Q3 results exceeding expectations. Warren Buffett increases stake in Occidental Petroleum to 25.8% with new purchase. Stay tuned after the short ad break for more details on these top headlines. According to a study supported by the U.S. FDA, older adults who received both COVID-19 and influenza vaccines were found to have a slightly higher risk of stroke. The study analyzed over 5.3 million Medicare beneficiaries aged 65 and older who received Pfizer, BioNTech, and Moderna COVID-19 shots in addition to flu vaccines. Interestingly, the research indicated that there was no increased stroke risk when only COVID-19 shots were administered. However, when combined with high-dose, adjuvant flu shots, the risk of non-hemorrhagic stroke and transient ischemic attack was raised. It is worth noting that authorized flu vaccine makers by the FDA include CSL Limited, GSK, Sanofi, and AstraZeneca.
Shares of Altria experienced a slight decline following a disappointing performance in the third quarter and a revised earnings outlook for 2023. The tobacco company has adjusted its guidance for full-year adjusted diluted EPS to a range of $4.91 to $4.98, down from the previous range of $4.89 to $5.30, falling short of the consensus estimate of $4.99 for the year. In Q3, Altria reported an adjusted EPS of $1.28 on revenue net of excise taxes amounting to $5.28 billion, representing a decrease of 2.4% compared to the same period last year. Both figures were below expectations, with net revenues declining by 4.1% to reach $6.3 billion due to lower sales in smokable products and heightened competition in the market.
BP has announced its agreement to acquire ultra-fast charging hardware units from Tesla for $100 million. This move aims to support the expansion of BP Pulse's public network across the U.S., with plans to begin rollout in 2024. The Tesla chargers will be installed at key sites including Travel Centers of America, Thorntons, AMPM, and Amaco, as well as BP's GigaHub charging sites and third-party locations such as Hertz. The deal is part of BP's $1 billion investment in America's EV charging infrastructure by 2030.
Amazon stock experienced a rise following its Q3 results. Despite Amazon Web Services' disappointing growth, the retail giant exceeded expectations by reporting earnings per share of 95 cents, surpassing the estimated 60 cents. Sales for the quarter amounted to $143.8 billion compared to a revenue of $141.56 billion. Looking ahead to Q4, Amazon projects net sales between $160 billion and $167 billion. CEO Andy Jassy attributed their success to various factors including improved cost efficiency and delivery speed in their store's business segment, robust growth in advertising revenue, as well as increased operating income and free cash flow. It is worth noting that Amazon's shares have seen a significant increase of 39% year-to-date.
Shares of Enphase Energy experienced a sharp decline of 17.7% during after-hours trading on Thursday. This drop brought the stock to its lowest point in 3 years. The decrease followed the release of Enphase's mixed third-quarter results and disappointing fourth-quarter guidance, which fell well below expectations. While Enphase's net income for Q3 remained unchanged at $113.9 million, its revenues suffered a significant decline. Revenues dropped by 13% year-over-year and 22.5% quarter-over-quarter to reach $551 million. This decrease was primarily attributed to macroeconomic conditions and a decrease in demand within key European markets. Looking ahead to Q4, Enphase anticipates revenues between $300 million and $350 million, which is considerably lower than the analyst consensus estimate of $579 million. As a result of this news, other solar stocks also experienced declines during after-hours trading.
The Nasdaq Composite ended Wednesday's trading session down 2.4%, placing it in correction territory as it now sits over 10% below its mid-July peak. This represents the 70th correction in the history of the Nasdaq. Notably, technology giants such as Alphabet, Meta Platforms, and Amazon have also experienced substantial declines this week. Additionally, tech-focused exchange-traded funds are being impacted by the current market downturn.
Shares of Intel experienced a significant surge of over 6% during after-hours trading on Thursday. This surge was driven by better-than-expected quarterly results and positive guidance provided by the company. Intel reported adjusted earnings of 41 cents per share on a revenue of $14.2 billion for the quarter. The strong performance from its client computing group, as well as growth in data center, AI, and mobile segments contributed to these impressive results. Intel's CEO, Pat Gelsinger, expressed confidence in the company's transformation strategy during this period. As a result of Intel's positive performance, its competitor AMD also witnessed a 1.5% increase in its stock price. Looking ahead to the fourth quarter, Intel anticipates revenue ranging between $14.6 billion and $15.6 billion, with adjusted earnings projected at 44 cents per share.
Warren Buffett has increased his stake in Occidental Petroleum, leading to a 0.2% rise in the company's stock during early trading. Berkshire Hathaway, under Buffett's guidance, acquired more than 3.92 million common shares, which brings their total holdings to over 228 million shares. This new acquisition accounts for approximately 4.11% of Buffett's portfolio and raises his stake in Occidental to 25.78%. As a result of this transaction, Berkshire Hathaway now controls nearly $14.4 billion worth of Occidental common shares alongside preferred stock and warrants that allow them to purchase additional common shares at a predetermined price. Despite this substantial investment, Warren Buffett has made it clear that he does not intend to gain control over the company.
Thank you for tuning in to the Daily Business and Finance Show. Stay informed, stay inspired, and we'll catch you next time. I'm Montgomery Jones.
And I'm Amalia Dupre. See you later, until tomorrow comes around.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.